Okay, perfect. Good afternoon, everybody. Welcome again to the Canadian Bitcoin Conference podcast. Today we're joined by Didier Lavallée. Is that the best way to say it, Didier?
Yeah, Didier Lavallée. Yeah.
Okay. So Didier is founder and chief executive of Tetra Digital Group, seasoned financial executive in Canadian's digital asset ecosystem. Welcome, Didier. Good to see you.
Yeah, welcome. Thank you so much. Thanks for having me.
Yeah, no problem. Listen, you've been great. Every year you've been at the Canadian Bitcoin Conference, coming and giving great overview of what's happening in Canada and the digital asset space. Do you want to give us a quick introduction of yourself as well?
Yeah, of course. So been in the space since 2022 formally, but been I would say a Bitcoiner since 2018. So in a prior life as well. My background is in financial services. For those that would be familiar with it, in trading desks and trading stocks and foreign exchange and asset servicing and all that good stuff. Pivoted, about 5 years ago now to help Canada essentially scale digital asset infrastructure, specifically around regulated products. So I think we'll probably dig into it a little bit today, but it was a big failure in Canada, the Quadriga CX failure. It really forced regulators to circumvent the digital asset or the crypto space and create regulatory regimes. And coming out of that, there was a few opportunities to create essentially regulated infrastructure players that could be trusted by the consumer and by massive organizations and institutions. So Tetra was born out of that fire, if I can use that. We set up Canada's first regulated custodian. So it's a trust company. The company's based out of Alberta. And since then, Tetra has evolved to provide all sorts of services to Canadian institutions. We provide software. We're also a stablecoin issuer, which I'm sure we'll talk a lot about today. An avid voice in the space, very passionate about what we do and very passionate about this technology and how it's helping both people, but also institutions.
Perfect. So I'm going to bring on the rest of the team. So we have Sunny and Ben and Wasim. You guys want to jump on?
Hi, Didi. Pleasure to meet you.
Nice meeting you.
So I guess the first question when we were researching for this was, what's the need for Canadian stablecoins, Didier?
It's a good question. I think it depends who you ask them. And I say this because, if you look at today, about 99% of global volumes of stablecoins are done by US denominated tokens. So USDC and USDT. And a lot of people would say, well, you don't really need non-USD stablecoins because the US market, has cornered the infrastructure. I view that as slightly biased and also say we're still in very early days in this technology. My background's in FX, so I managed traders for a long time, trading foreign exchange and infrastructure around foreign exchange. The US is still a dominating player in foreign exchange, but the Canadian dollar is actually 6% of global flows. That is a huge amount for a country that's roughly 2% of global GDP. So when we see the Canadian dollar stablecoin opportunity, we think that more volume will move eventually on chain, and you need global pairs, specifically G7 pairs, right? So there's very traditional pairs that happen in FX markets: euro, sterling, Japanese yen, Canadian dollar. That's part of it, and we think a lot moves there. Now, why do we care as Canadians? I think more importantly is that you want the sovereignty of a Canadian dollar on chain. If Canadian businesses are moving US denominated stablecoins, by their default, they're supporting US debt, US T-bills. If you're moving a Canadian dollar, you're supporting Canadian dollar government bonds. So there's also a sovereignty component to having a competitive product in market. And that really kind of drives us in terms of getting something that's, very usable, but also, very sovereign into market and competitive.
So Didier, it's rare to have somebody who has such a past, right? You went all the way back to Quadriga. I think it was like, what, 2017-ish, right? That's not a great Canadian history, but it is what it is, right? But I think from that, we've emerged. So if I zoom out for a second, I know you kind of, Dan, dived right into the stablecoin question, but I'm just kind of looking at DeFi Llama. I see stablecoin market today is like 310 billion market cap. USDT is like 60% dominance. USDC is, far number 2. And there's a whole bunch more coming into the ecosystem, right? So how do you see that playing out? I mean, I understand your point about kind of Canadian stablecoins, but like, how do you does it end up kind of following, because Canada, I think, has some percentage of global market share of Canadian dominated bills out there. Do we follow a similar kind of trend? Is that where it kind of eventually lands, or is it going to be mostly denominated, end up US based?
Yeah, I would say at the macro level, we look at two things, or I look at two things. So one is the global FX markets, like I said. So, I mean, you can pull any Chat GPT or whatever your preference is on large language model and do a little bit of research, and you will see what global flows look like, and that Canada plays an important role. So 5 to 6%, like I said earlier.
Right.
The other thing we like to look at is essentially how many countries hold Canadian dollars on their treasury, because that's, to me, is a leading indicator of whether or not people would hold a digital dollar as well, right? In terms of your China, maybe China's not a good example, but let's say you're India, you're a different country, and you wanted to diversify what you hold in terms of global currencies. Canada's been growing its share, actually. So one of the things that people tend to forget is, like, while stable coins are US denominated, the treasury holdings of US dollars globally have been falling in the last decade or so. A lot of it is macro driven, a lot of it is political, geopolitical, and some of the things that have been happening. But Canada's growing. More and more people want to hold Canadian dollars. Why? Because we're a stable jurisdiction, we're a predictable jurisdiction. So we look at both those signals in terms of there's growing demand for Canadian dollars, both in trade, right? So FX, and both in actual holdings. And we think that bodes well for Canadian denominated stable coins. The one caveat on the holding perspective, Wasim, I would say, is you need a competitive product. It's the second time I say this. If you look at US dollars stable coin, what makes them competitive is the fact that people can earn a yield on it. And if Canada comes out with regulation where yield is not available to users, then by very definition, you're in a sub category of usability, right? And that would be a problem. So that's one of the things that we care deeply about. We market to the government and to various stakeholders to ensure that whatever policy is going to come out of Ottawa, that it has to be competitive. So foreign jurisdictions are incentivized to hold this Canadian dollar, which by very definition, again, drives positive returns for Canadians.
And maybe a quick follow-up on that, right? So if in the US, they've got the Genius Act, which kind of binds, issuers to basically collateralize all of the stable coins they issue with treasuries, or at least back it up one-to-one. Is there an equivalent legislation in Canada? What's being tabled?
Yeah, so this is where I think our current government probably doesn't get enough credit. They don't deserve credit everywhere, but I will say they deserve credit here. They've been moving with intent as part of the budget that was tabled in the fall, so C-15. C-15 embedded in it had the Stablecoin Act. The Stablecoin Act received royal assent earlier this year, which means that it's passed Senate and the House, and now it goes into drafting. The actual legislation is currently being drafted. We expect to see the first drafts out publicly around the September timeframe. I think I would note for this podcast is when the drafts comes out, companies and individuals have the opportunity to provide their view as to the regulation as it's being drafted. And then there'll be another turn, and then it goes into law, hopefully by early 2027. So between now and let's say Q2 of 27, we should have full regulatory clarity around stablecoin usage in Canada. It will make them, at least as we can see right now, there will be thought of as payments instrument in terms of the token and their usability and the law they adhere to. And that is pretty fast from a regulatory framework perspective. For nothing to law, about 18 months. The government's moving with intent, and I don't think that's surprising. I mean, our premier is an ex-central banker. Like, he understands money's flows, he understands competitiveness. He wants to ensure that Canada's competitive at scale when it comes to digital dollars, and they're moving quickly. So anybody that cares about this Stablecoin Act at the federal level, currently with the Minister of Finance's office, with the expectation that the first drafts will be shared. Well, the first draft was already shared as part of C15, but the draft of the legislation would be shared around September timeframe.
That's excellent to hear that Canada was, once a leader kind of in the digital asset space, and it sounds like from your point of view that we're not behind the curve on with kind of stablecoin regulation, et cetera. So that's, I had some questions about market in need and kind of our government's current stances, et cetera. But if you can just kind of bring this back to almost kind of some first principles and how did we got here? I'm a Bitcoin maxi. I think you said 2018 you got, or 17 you. So immaculate conception. We have Bitcoin, and I don't know the history here, but I'm presuming crypto was kind of that came before stable coins, or maybe a stable coin became something that was before. I guess, do you see these three buckets: Bitcoin, crypto, stable coins? Are there other buckets? And why do you see stable coins leaning towards the crypto rails versus the Bitcoin rails? Is that for speed and we can make things happen quicker and things move slow on Bitcoin? Do you see that eventually coming to Bitcoin? So broad, but just how did we get to stable coins through that journey?
Yeah, I think that's a really good question, and I'll try to kind of work through it from a Bitcoin angle, if it makes sense, right? So Bitcoin comes out, the white paper, obviously phenomenal kind of evolution. But I think very quickly the usability aspect got debated. I'm going to use the word debated, right? And then you had projects like Ethereum that came online, and then since then you've had hundreds of monkey coins and chains and all sorts of things that have hit the market, right? Ultimately, when you look at transactions and payments and moving value around the internet, while Bitcoin can facilitate that activity, it is, in my view, slightly imperfect for the kind of activity we are seeing today, and more importantly, where the activity is going. So what do I really mean by that? Today, if you want to send money across the world, you can do so in Bitcoin, you can do so on Lightning to accelerate the transaction, minimize the cost. But there's still fragmented liquidity on Lightning to some degree. Stable coins have really addressed the problem of moving value anywhere in the planet very efficiently. So they've really kind of solved that problem really, really well in my personal view. Now, where it's going is where it gets really interesting, because you are now seeing more and more usage of AI, and therefore things like agentic commerce are starting to come to fruition. And agentic commerce, even things like Ethereum or Solana, which is probably blasphemy to talk about this on this podcast, but I will, they're not very competitive anymore, right? Even the layer 2s on top of Ethereum, like Base, are not competitive for agentic commerce. So you're seeing a new wave of chains coming into market, like the Tempos, the Plasma, the Arcs, that are really focused on moving value on chain very quickly. The nature of these blockchains are different than even what we have today. So the problems that are being solved, I think, are moving away from the original white paper of Bitcoin, which is really transacting at scale globally, and not just sovereign individuals anymore. I think it's moved into a global commerce and business segment. And as such, the toolkit is changing. Your question around, the buckets of digital assets, as I would call them, I think Bitcoin has continued to, and will continue to, not only dominate, but have its own bucket, right? Obviously, there's a very strong community around Bitcoin. Some people call it the digital gold. So you can call it the original. But I can tell you, as a player that operates in the regulated space, that it does a business-to-business, has a business-to-business offering, 75% of what we hold for our clients is Bitcoin. Bitcoin is just a dominant token in this space, if I can use that framing. After that, I think you have what I'm going to call utility tokens, and I would put stable coins in that, right? So stable coins solve cash, but if you look at where we operate in, we are starting to see a variety of assets move on chain, so being tokenized. So you're starting to see money market funds, you're starting to see equities, real estate. I mean, there's just a plethora of things that are moving on chain very quickly. And, the industry would talk about these things as the tokenization wave. And, that's growing very rapidly. And some people are incredibly constructive as to, where that would go. I think that's your second bucket. So essentially, utility tokens that are moving on chain. And then your third bucket, I almost call it the memes, the game, like the
fun stuff,
the fun stuff, right? So I think that bucket can be very community driven. There's still some projects that, go live and kind of create these communities around them. But the utility is I think I'm going to use the word niche. And as such, I think that bucket's going to continue to operate kind of on its own. And if anything, if you follow the online activity and the on-chain activity, I should say, like, it's getting weaker and weaker in volume and less present, right? So I would define those three buckets to answer your question specifically, Ben. And then, we are seeing people and companies wanting to experiment on top of Bitcoin for stable coins. You've seen some announcement out of USDC in the last 2 weeks. I put that akin a little bit to the orbital or trend that we saw a couple of years ago around NFTs. When NFTs got really hot, some Bitcoin miners and Bitcoiners decided to basically prove that the Bitcoin chain could also do that. But ultimately, I don't believe that that's what the Bitcoin community should care about, or like that's really what Bitcoin was intended to be. That's my personal view. But we are seeing some of that for sure in terms of, a trend that, is coming out of the Bitcoin community. Is people are trying to figure out, hey, can we utilize the Bitcoin chain to essentially do transaction akin stablecoins?
So to add to Ben's question, right? He asked it kind of from the usability, like layer one, kind of the blockchain rails, right, on the stablecoin side, right? But if you go on the other end, right, on the back office, right, because you also need to custody, you need to kind of collateralize fully your stablecoin issuance. So I mean, there are Tether as an example, right? Obviously, they I know by legislation, at least in the US, under the Genius Act, they have to hold treasuries, but they don't just hold treasuries. They also hold some Bitcoin. I think they buy land and gold, etc. So is there a play there for Bitcoin? Does that fit into the picture on the collateral side?
I think definitely.
Because that's a perpetual bid potentially, right? As stablecoin issuance increases, then so too would demand for Bitcoin potentially.
Yeah, I think my personal view, and I would say with our stablecoin, we're 1-for-1 backed. It's a regulatory requirement, which means we need to hold $1 for every dollar in circulation. Now, that does not mean we can over collateralize above and beyond that and potentially start thinking about additional assets to add into our mix, right? I think the important part is we're 1-for-1 on a dollar reserve basis, but if we're looking to do anything else, we can. There's certainly some demand in terms of, I'm going to call it adding, inflation-proof or harder assets into your reserves. You are correct, USDT globally, I mean, they're one of the largest off-taker of gold mines globally, right? So they buy a ton of gold that's into production. They also have a lot of Bitcoin. Nobody really knows how much to some degree because they haven't been fully audited. So there's certainly appetite. There's other things we also talk to around various projects where, you might be a Bitcoiner at heart, but see the utility of the stable coin, and therefore you're not really interested in getting yield or rewards on top of stable coin. You would like to get your rewards in Bitcoin, right? So there are things that, we look for in terms of, hey, if this, I do believe in the utility of a stable coin, but ultimately I don't want to accumulate more of them. I'd rather accumulate sats. So is there a way for you to pay the interest or the rewards, or, got to be mindful of the language here, the yield, but, can you do it, in Bitcoin instead of the underlying stablecoin token? So I think there's a lot of flexibility and capacity to evaluate these things. And I would say Wasim, those are conversations we're actively having with a lot of the projects in Canada and some of the US that are Bitcoin focused, that want to add stablecoin capabilities. For sometimes it's on a settlement pair or transactional pair, or sometimes it's for funding. So clients can come in and fund via stable to buy Bitcoin. And then do you create a capacity to maybe hold some stable on platform? And then what does that look like, right? Because ultimately, if you hold a Canadian dollar stable coin, it's not a productive asset to hold on to if I'm not paying you anything on it. So can I pay you Bitcoin on it? Yeah, maybe, right? So we're exploring a lot of these things.
Just in terms of outlook then, DA, for the next 3 to 5 years in the digital asset infrastructure in Canada, do you see stable coins growing significantly? And what does that look like for you?
Yeah, I mean, we're certainly, I'm going to call it, I drink the Kool-Aid. I'm certainly pretty constructive and bullish on where this is going. And I was listening to something from the team at Visa this morning, and Visa, MasterCard, I mean, all these global players are very much in tune with what's going into the stablecoin space. And if you look at it, they don't look at the marginal number because, 300 billion of supply is arguably irrelevant for most of the financial institutions at the global level, right? What they're monitoring is the delta of growth and how fast this space is growing, right? And it's growing incrementally fast. I could tell you in Canada, our thesis was remittance corridors, so cross-border activity was going to be very strong. So Canadians sending money to India or Pakistan or some of the other big corridors. We're seeing tremendous demand, business to business inside Canada. So people that are looking to settle and make transfers more efficient, because real-time rails are not available yet in Canada, right? And then you have treasury use cases that are showing up. So I think we're based on the front line of what we do. We are very bullish and constructive as to the utility of this infrastructure and how it will grow. We see Fortune 500 companies in the US that are interested in Canadian tokens because they do a lot of cross-border activity. We obviously have a huge trading partner to the south. So yeah, there's a lot of really nice opportunity. I think where Canada could get in trouble is if we move away from a private stablecoin and utility that's fungible, that has interoperability globally, and move to a big bang concentrated model where only the big 5 or 6 banks control this technology. And then you're kind of getting into a pretty dangerous area, right? From a sovereignty perspective. So, we think about those things a lot at Tetra, and we want to create a globally competitive product. But ultimately, we also have to be mindful as Canadian now to go down a path where you're ceding more and more control to the big consortiums.
You mentioned Visa, actually. Visa onchainanalytics.com. I mean, they have a great website on stablecoin tracking, and it's quite amazing.
Yeah, they're what their reports pretty good.
It's kind of surprising, actually.
Listen, I was sorry not to interrupt, but I've been shocked by some of the commentary coming out of the Visa team that they're paying so close attention to this.
Yeah,
shocked meaning
they have a great dashboard.
Yeah, they're maybe worried's not the right word, but like they're on this quite heavily.
Hey Didier. Yeah, by the way, super bullish on the remittance corridor thesis. I know a guy actually running a Bitcoin exchange in India as well that supports stablecoins. You should talk to him. But this is a Bitcoin show, right? So I want to kind of be direct about this. So Tetra custodies Bitcoin for Canada's ETFs and institutions, right? And in your book of business and in your own thinking, I guess, what is Bitcoin's role versus the stablecoin's role? Like, is CAD essentially a bridge that eventually brings institutions to Bitcoin, or are these like permanently separate lanes?
I think it's a good question. So I would just start by saying, yes, Tetra has Bitcoin in custody for ETFs. We also work with crypto trading platforms, so regulated custodial platforms in Canada. And also have a pretty large business around high net worth and family offices. So people that have been Bitcoiners since, the 13s, 14s, that have accumulated a significant amount of wealth. And now they have decided to move their Bitcoin with a qualified custodian because they're talking about or thinking about multi-generational planning, right? So it's become very different in terms of their approach. I think stablecoin is two things as it relates to Bitcoin. One, it is a bridge that allows people to better understand this technology. Whether we like it or not, stablecoin usability and usage and the fast pace of growth is bringing a lot of people into the ecosystem that, possibly would have ignored it in the past. And then they learn about a variety of things, including Bitcoin. So I think that's a net positive. The second piece I would say is, in a perfect world, a stable coin is a settlement layer for a Bitcoin transaction, right? So as people are buying or choose to sell Bitcoin for a variety of reasons, it's a lot more efficient to do it via stablecoin than via a traditional fiat leg. So there's certainly that bridge into it. Whether, longer term it becomes more complementary as ecosystem, I'm not really clear, but I think it's adjacent and complementary, at least right now. And we've been tasked to come in and educate a bunch of financial institutions around this technology, and it always starts with Bitcoin. So I actually view it as a net positive, because you can't do a presentation on digital asset if you don't talk about Bitcoin.
And then one more question, Didier. So you guys went live on May 4th, right? On Ethereum and Base. So I'm just curious, how are things going? Who's using it? Can you give us some details?
Yeah, because you launched just before the bear. We're down 50%. So curious to get your perspective maybe on that. Yeah, good question, Sonny.
I think the stablecoin or the way we talk about it at Tetra is you have like basically a bear market in crypto, but you have a bull market in stablecoins. So people are incredibly excited about stablecoins, and there's a lot of building going on. Listen, as an entrepreneur, you always want to see things moving faster. You want to drive towards the largest possible outcomes. But I'm presently surprised with the reception we've received. We've announced a lot of partnerships since launching May 4th. I would say we've been doing a lot of work. There's the ecosystem around a stablecoin to create usability around it. So you need market makers that support it. You need liquidity providers. You need decentralized exchange liquidity. There's all these things that you need to create to be able to have a really fungible and usable token. So we've been setting those things up, and we actually have a client that's going live this week, a B2B remittance corridor business in Canada. So we're really excited about that. The token's available to buy on a lot of platforms in Canada currently. So, you can buy it on Coinbase, Kraken, Wealthsimple. I mean, the list just goes on and on in terms of where clients can buy it. There's also a lot of non-centralized wallet that you can buy it on. So Phantom, for example, and some of the other ones you can buy and transact our token. So I'm quite happy with the progress. I think we need to do a lot more, and you will see a lot more in the back half of this year. You will see major announcements. You will see retail-facing platforms in Canada that will launch this. And then you're going to see a lot of settlement flows. And I think this is where it becomes really interesting. So less focus on small value, lots of transaction, more large amounts of capital moving with this token between institutions.
Hey, Dad, can I ask one more before I hand the mic over?
Sure.
Okay, so Quadriga CX. I unfortunately got to meet the guy.
I'm trying to forget about that, Sonny.
Well, I was going to ask you, because you kind of brought this up in the pre-intro, right? So $90 million of Canadian customer money disappears essentially, right? So I guess you were around that time, I assume, right? And so what where were you when that story broke, and what did it reveal to you that I guess most of Bay Street misses?
Yeah, so it's funny because I've just been re-listening to the podcast Exit Scam that goes through the whole Quadriga CX story, which is really great. It was done in 2021, but it's certainly like a good listen for anybody that hasn't listened to this. So I was working in traditional finance, or TradFi. I was trading FX at the time it was happening. But it really showed that, I guess, trusted your keys and your Bitcoin to a single individual in an unregulated format is probably not a good idea. And you've had many of those examples, I think, globally now. I get challenged sometimes by the community as to like, well, you're a centralized honeypot, you're a regulated custodian. True, we do hold assets for a lot of individuals, but they choose to custody with us, partly because we work in a very regulated and governed construct, right? Running a financial institution in Canada is no joke. The requirements that are on top of us are very high. Lots of audits, lots of third party, lots of capital requirements, lots of infrastructure, and we take what we do very seriously. And I think there's a place for that as well in the ecosystem. What it really revealed was the need for properly regulated infrastructure for Bitcoin, right, in Canada. And again, I'll use the example of individuals that have been Bitcoiners since 2014 that choose Tetra to hold, in some instances, hundreds of millions of Bitcoin. And they do so because, again, they're thinking generationally. So if something happens to me, want to make sure that there's transition with the assets, the Bitcoin, the family set for generations, forever. And two, there's a lot of work that goes into choosing a partner to do this, and our reputation or our technology, stand on its own when it comes to that. Quadriga taught us a lot. I think the ecosystem continues to grow. I think for any Bitcoiner out there that, the lessons that come out of that is, if you're going to work with a counterparty at this point in time, Canada has a lot of great regulated counterparties. If you choose not to do that, then you need to choose to manage your own keys and be responsible around that, right?
Yeah. I think that's a conversation that I have certainly quite often is, a lot of people are like, yeah, it's all self-custody, but a lot of people aren't comfortable or competent to, custody their own Bitcoin. So, I mean, that's, and the whole generational wealth thing, is really, I think as the younger Bitcoiners who got older and starting to think, like they say, multi-generationally and families and estate planning, and you hit the 40s and 50s and you're starting to go, right, what happens if I just don't wake up one day and what's going to happen to my Bitcoin and who's going to get it? And yeah, like you say, that needs to become a thought as well. So, but Didier, I wanted to ask you, everybody's got a Bitcoin story, an initial Bitcoin story. What's your initial Bitcoin story? How did you get into Bitcoin?
Yeah, I mean, I'm actually, I want to look, because I want to reference this the right way. So if you guys, I know we're live here, but if you guys give me a minute, it was essentially a book. So I read a book in 2017 that really resonated with me. And it wasn't the Bitcoin Standard, or it wasn't, any of the typical books. And now I recognize there's so many Bitcoin books, so I might not find it.
Rich Dad, Poor Dad?
Yeah, it was it?
Robert
It wasn't
Kiyosaki?
Bitcoin. Yeah, no, it was
Probably Wealthy Barber then.
Digital Gold, Bitcoin, an inside story of misfits and millionaires trying to reinvent money.
Nathan Pot. Nathan Pot. What's the
yeah
that's the.
And at the time I was working in capital markets, so I was trading stocks, and I'm going to use had investment accounts and move things around a little bit. And I was like, this makes a ton of sense to me.
Yeah.
I was like, this is just really exciting, and I think it makes a lot of sense. And I was living in the US. I was working in New York at the time, so I could basically open a Coinbase account, and I bought some, right? And then you start scratching into the ecosystem a little bit. And then my family and I relocated to Canada, and I started trading foreign exchange, going to foreign exchange conferences. And then there was always this weird part of the conference that was Bitcoiners. So traditional corporate FX, big conference in the US. And then there's a part of it that's these guys that are talking about this ecosystem. And I was like, okay, that's continued to resonate. And then over time, that became a little bit of my story. But it was really just reading about it, resonating. I lost my job in the financial crisis, so I understood very well the financial manipulation. I was at the front line of it. I remember when Lehman failed, I was living in New York City at the time. I lost my job. And then the story I don't speak about too incredibly publicly, but my parents were debanked. So my dad was an entrepreneur. He had relationships with financial institutions, both personally and professionally, for over 38 years. And in Canada and Quebec. So it's not it's overseas or somewhere crazy. And then for some reason, at some point, the banks decided they didn't want to deal with my family anymore. And they just pulled everything. And I saw my family go through all of it. So I saw my parents lose their bank accounts in their 60s, having to find, new bank accounts, a new financial institution, the strain it put on them. And really what I would say is for no good reason. And now they're fine. It's about a decade later, but it took them about 5 or 6 years to financially recover from it. And the aspect of, kind of giving so much power to the financial institution was always Maybe it's the slight delinquent in me that, you know, wanted to have an edge somewhere. I'm still in regulated products, by the way. I still run a regulated business, so I'm not fully out of the system, but I like to think that we contribute in a variety of ways. But there's some personal elements to why I bought into the ecosystem as well.
That's excellent. That's interesting. Didier, we try to keep this to about 40 minutes, so it doesn't go on too long. But Ben's got a question. I think this might be the last one. You want to go ahead, Ben?
Well, yeah, no, I appreciate the brevity to not go on for long, but it's hard not to have the question be asked about our neighbors to the south especially when it comes to this market. And just, you know, with Trump, we had the SBR, you know, when there was this Bitcoin community got all excited, and then he shitcoined on the inauguration. And then kind of since then, it's been all stable coins with Genius, Clarity Act. If I'm not mistaken, we're on the doorstep of Clarity Act passing or not passing. And I don't really know my American politics and how that all works, but that's, I believe, getting voted on. What does that mean for the industry, the states, Canada, if it does? What if it doesn't? And back to the original kind of framework of how with the United States getting involved, you know, do we see it as, or is there any potential concern for the Canadian dollar, not the digital dollar, but the Canadian dollar, if the US has stablecoin dominance globally? Like, does Canada's actual currency have any kind of threat to it? And is that something that Trump and team are thinking about? Or is this my conspiracy tinfoil hat?
Yeah, no, for sure. Yeah, so I mean, listen, polarizing administration down south for sure. I was in Nashville when he gave his speech ahead of his election. You know, so there was a lot of single issue voters that cared about crypto and Bitcoin in the US that really helped get Trump elected, right? I think he's done good for the space, but I think where it is not as good as the family involvement, and I don't really want to get into politics, but like Dave made so much money on the back of this industry since being in office, which to me is like a little bit of a knock. Like, it gives a surface of attack for the non-believers and the people that just want to exploit that, right? So there's been some good, there's been some not good. Clarity Act, it's an interesting bill. I'm probably on the side at this point. I don't think it will pass, and that's just my personal opinion. We're getting late in the cycle, close to the primaries. It's a complex bill. It solves things like derivatives and other market constructs. So I think it would be a positive signal. I think the things in the US that have been positive it's for sure Genius, but they've also given regulatory clarity. What's a stable coin? What's Bitcoin? You know, what's a tokenized security? Who's responsible for regulating all of it? And I think Canada can learn some of these things. Like, Canada has like 13 provincial regulators. We have SROs. We have the federal government. I mean, there's I think 21 financial regulators in Canada, if I don't mistake, that regulates some parts of the market. So it's really hard to get any business done. And clarity around how we treat Bitcoin, how would we treat the rest, let's just leave it at those two buckets, would be super helpful for industry. In terms of your CAD threat, I mean, I'm gonna double click on that. Like, yeah, huge, right? So what do I mean by that is, if Canada doesn't have a competitive product out there, Canadian business will build on these rails because of the productivity that they bring, and they will do it on US denominated coins. We see this today. We have a bunch of partners that are announced publicly that have announced proof of concepts on USDC. And I'll use this example because it's one of our great partners and we work really well with them. But like, Wealthsimple did a Visa partnership and they announced the proof of concept, or they're selling the credit card that Canadian use, that's Canadian dollars, is settled on USDC, because when they were running the proof of concept, our token wasn't live yet. So there was no available Canadian stablecoin they could use. That's a problem, and if we don't address it, it's going to grow because the technology is so good that businesses want to use it, and the FX risk is worth it. So they'll take on the risk, and that means more dollars in our system, more dollars that are moving value around away from the Canadian dollar. So if we don't respond, it becomes problematic. And then I would say, like, the UK has changed its posture on stablecoins, decided to create a more competitive framework. You're seeing stuff out of Mika, and all of it is a response to, you know, the growth and the acceleration of US dominance. So yeah, we do need to respond. I do think there's a threat. There's certainly some things we want to learn from their policies and regulation that they've created in the last 18 months, but I think not all. I'm going to be on the sideline that not all of it has been good, and we need to take the good and hopefully leave the bad aside.
So I got a question. I just want to kind of look at, get your perspective on something, right? So, I mean, you mentioned something earlier, kind of got me thinking. So, I mean, we've been trying to deal with a pretty nasty bear market, right? Since October of this year, we're down more than 50%. The ETF outflows, I think last month would hit a record high of number of outflows, right? Selling Bitcoin. Sentiment is terrible, right? You kind of see Twitter, you know, ex Bitcoin really, there's a lot of battling going on, right? I think Saylor's being attacked left, right, and center as if he's the reason why this is the Bitcoin price is tanking. But I just want to ask you, like, I mean, typically bears are the best time to build, right? So are you getting a different kind of person calling you? Are you getting more interest from institutionally? Because you mentioned that stablecoins is actually, the interest is increasing despite the bear market. So I'm just curious, like, is the complexion of the person interested in speaking to you changed? Are you seeing, you know, that changing? And then maybe the follow-up question is, what's the Bitcoin price from here to the end of the year?
So I don't know if my compliance team will allow me to make a prediction. Maybe what I'll say is I believe in the 4-year cycle, and it seems like we are bottoming here. So, you know, don't take that as financial advice, but I think things are looking a lot better to the upside than to the downside at this point. But I'm a net accumulator in Bitcoin. I buy some with every paycheck, and I, you know, just hold it forever. So I'm probably not the kind of person you want to listen to because it doesn't matter what the price is. I'm just a long-term believer in this. I would say it's night and day between this bear market and last bear market. What do I mean by that is when FTX, Celsius, and all those things happened, everybody disappeared. Nobody wanted to do anything. And it was really like walking through the Sahara looking for a patch of water. I mean, it was absolutely awful. Now basically all companies and all financial institutions are trying to figure out what to build in the space. And by the way, that includes Bitcoin liquidity, Bitcoin denominated product, lending products, you know, margin products, like whatever like the industry needs and should have, or you should be able to potentially create a loan on your Bitcoin to buy a house. Like these products don't really exist at scale and in a good way today. Like there are a couple of lenders out there, but I probably have strong opinions around their practices and what they end up doing with the underlying assets and whatnot. So like there's a lot of product development that's coming in, I think in this market, and it's being built right now. So I'm incredibly positive and constructive when we're going to come out of this bear market. You're going to see a strong acceleration of product and demand. So yeah, I would say I'm on the very constructive side of the ecosystem, and I would say this bear market feels very different than 23 and 22 and 23.
Can't wait for the bull.
Yeah,
it's coming.
Hopefully, as you're saying that, you know, a few of us as we're gearing up for Industry Day in October, we've been having discussions with bigger institutions, you know, some of the banks, and it's. I was just thinking, they're so slow to move to things. They probably started discussions at the top of the bull market, you know, about, you know, starting to think about Bitcoin and stable coins and different things. But by the time they get around to actually doing anything, we're at the bottom of the bear market. Like they're probably going, maybe this is not a good idea, but maybe by the time.
It's Canada Crypto Week last week, and all the big banks are there and speaking.
Yeah.
Never seen this in like 6 years. Right. So like the tide is certainly changing.
Yeah, we see it as well. I mean, that's like I said, we're talking to probably the same people at those events as well, and they are interested. They're getting out there, starting to be more liberal with the messaging, trying to get up on stage and talk about it. So yeah, it's definitely the tide is turning. So I think that's a good place to stop it today. Didier, listen, we'll give a plug to our conference coming up. I think you're going to be there in October. It'll be great to see you. And yeah, we anybody who's listening, we hope you come and support. See DDA, talk to DDA, talk about the products, talk about what's going on in Canada. And yeah, we thank you very much for joining us, DDA.
Thanks for having me. And yeah, we're excited about the event in the fall. We look forward to being there.
Perfect. Thank you very much. Have a good day.
Here.
Thanks, guys.
Yes.